Okay, welcome everyone. We'll start our lesson. So before starting our lesson, a quick, a little bit introduction. My name is Anjum Satar and my email address anjum@ukversity.co.uk. I'm teaching with the University last 5 years plus now. And if you have any questions, please drop me email. Yes, quick introduction, please. Yes, where you from? What you do?
Chukwudidegu, originally from Nigeria, but I'm in Warsaw in the UK. I work as a receiving associate for TJX UK.
Okay, excellent, great. So welcome this unit and we'll start. Today's lesson will go through LO1, which is Learning Outcome 1, and our unit title is Unit 4, Accounting for Managers. So how managers can use accounting to make various decisions. So management is all about planning, controlling, organization, implementation, and decision making. So this unit aims why we are delivering this unit will help the learner skills and help you to develop your understanding about financial statements and range of techniques and different regulatory framework those we supposed to be understand when we'll make the any decision based on the financial information. Okay, so in terms of your current knowledge in financial and management accounting, where do you rate yourself?
6, 7.
6, 7. Okay, it means you have learned before some sort of financial or some sort of management before, yes?
Yes.
Okay, great. So we'll look before starting our what this unit consists of and how many learning outcome we have. So accounting for managers is a level 5. Is a 20 credit. This unit is a mandatory and related to business management. And we are doing first learning outcome, understand accounting concept and conventions. And we have a 3 assessment criteria, explain, so keyword explain and evaluate there. So when we'll do this learning outcome 1 within assignment, so we need to be focused the command word, what is meant by explain. Explain mean give the reasons, yes? Why? Not just, you write something, you give the reasons for this, why we need financial information. Evaluate the role of different users of accounting and financial information, which we'll go through. Then second lesson, we have learning outcome 2, lesson 3, learning outcome 3 and 4. We've been recommended conduct this, inductive contents, what we're supposed to be learned. So today lesson really focus about role, function. We can discuss about stakeholders, what they're and types of companies and types of ownership. That will be, and some recommended, the books are given here. If you have any a question, anything, or it's good to be look around some of these books and to further enhance your knowledge and skill. Okay, we'll start. Any question?
No, not yet.
Okay, so management accounting is the key element of the management. In particularly, it involves the identification, generation, presentation, interpretation, and use of relevant information help manage to run organization. That's why we need information. Information is a lifeblood. Those companies have right information, they can use it and they can make the decision effectively. But now nowadays we have overload of information, so we need to be really look around what is the right and what is the wrong, because a lot of that's why Donald Trump is saying fake news, huh? So as such, it's involved application of accounting and financial management, create, protect, preserve, and increase the value of the stakeholders. So what is meant by stakeholders?
Stakeholders are anybody that has value or contributes to the success of a business.
Brilliant. Anybody who has any interest or their interest will be influenced by the action or the decision from the company is called stakeholders. So it can be suppliers, investors, all stakeholders. And you are the stakeholder in University as well, yes?
Yes, yes, yes.
Okay, so we can look around management accounting decision making involved considering information that's been provided and making informative decision. Most of the decisions making involve making choices between. Decision making is making choices between various alternatives. That's what it's called decision making. We have, according to one great scholar, which Neil Robin, one of the economists, he gave that we have unlimited wants, we have a limited resources. We need to utilize our resources effectively. Only we can if we have a good, information and we make the right decision so we can maximize our satisfaction from our limited resources. So we can get maximum return from our limited resources. Yes. So our productivity should be more than so planning, it's need to be set objective, achieve, identify the way objective achieve. All we need decision making is means selecting the action and control. For control, we need the information. Reporting system in our organization is a control. You make plan, but you don't put the control in place. Like every year, with the respect of smoker, every year at the start of the year, they always say this year they will quit the smoke. Yes, it will be
Mm-hmm.
big change. But after few weeks, they start, smoking again because there is a no control. Yes,
True.
control is means looking back. Okay, next. What is the management accounting and financial? Management is the internal and financial is the external reporting. So management accounting, no such legislation required, but financial accounting we need to be follow lot of legislation because international accounting standards we need to follow, and we need to follow Company Act because we need to prepare the four types of financial statement, which is called statement of profit and loss, statement of also known as the income statement. It shows the income and expenses of the company. And second statement, statement of financial position, shows asset, liabilities, and equity, how much capital we have invested. We can find information. And the third statement of chain in equity, how many shares we issue. And the fourth is we can look around the cash flow in and out, how much from the business. So all these, accounts provide us information which we can use. So financial accounting, of course, we discuss about external and management accounting internal. So primary user is external and internal. Purpose of help investors, creditors, different stakeholders, both internal and external, but management is more internal. Timeline, there is every 12 months, but there is a no timeline in the management accounting. In the financial, we need to follow the gaps. It's called General Acceptable Accounting Principle in UK. And other country have a different legislation. Any question?
You said something about the four types of financial statements.
Yes, excellent. So do we know what those are?
No, can you repeat? Profit and loss, statement of profit and loss,
Well done, well said, yes.
um, statement that shows the liabilities,
Yes.
liabilities and assets of the company.
Liability is a legal obligation by law, we have to pay money.
Yeah.
Okay, we can write here maybe financial statements. Yes. So
Yeah.
first we call income statement,
Yeah.
is also known as profit and loss. If you want to show expenses and income, yes,
Yes.
it means profit or loss, you can find through this statement. Second is statement of financial position, is also known as balance sheet. It shows assets, how much you own it, yes, like property, plant, equipment, worth of. Liability, how much you owe it, yes.
Yes.
And capital, how much investment you have in the business. Next we call statement of change in equity. Equity means share capital, yes. How
Yes.
much dividend we paid during year.
To shareholders.
Shareholders, how many shares we issued. How much was the share premium? Yes, share premium all premium, and how much revalue our assets. That's also, so that all shows here. And the last statement is called statement of cash flow. Statement of cash flow. It shows inflow and outflow of the cash. Yes.
Yes.
How much money in? So they have three activities: operating activities, financing activities, and investing activity. So cash can become under our normal operation. That's why we generate the cash. We have a spare cash. We invested in other companies. We generate cash, or we borrow money. Is called financing. Yes. So cash in and out through all these activities we can look around. So that's we can find from these statements. Any question?
No, that's fine. I understand.
Okay, great. And transactions always start, accounting is start with always with a transaction. Primary documents, book of prime entry, and then we have ledgers. All this provide us information. So what is transaction is cash sales, one of transaction. Credit sales is one of transaction. Primary document, all sale invoices, credit note, these are primary documents. Book of prime entry, where we record or keep the record of the accounting. So such as cash book, such as sale ledger day book. Yes, if you're working on those books, so they provide the information. Then we have a ledgers. What is meant by it, like sale ledgers and purchase ledger. It shows, always in accounting we have a double entry bookkeeping, especially in financial accounting. So it's a dual effect. If I have a debit, I have a credit. If I have a credit, I have a debit. Let's say, if you buy furniture, so furniture is coming, but something is going out. Either the cash is going out, or either you creating a liability you will pay in future. So that's, so normally we divide double entry bookkeeping into, the word is called debt click. What's come on the debit side? Expenses, assets, drawings, all goes on the debit side when increase. What goes click credit side is always liabilities, income, and capital. It goes on the credit side when increase. So when decrease will be opposite of increase, is a decrease. Yes. So if I'm doing credit, so if I'm paying off money to my bank, the loan which I borrow, it means I'm reducing my liability. So I'll do debit. We don't need to learn about debit and credit, but that's also rules we have to follow in the double entry. Yes. Okay. Any question?
No, I understand.
Okay. We have accounting standard due to the organization. We need to follow standards and the rule to be make things clearer and people can understand it. That's why is harmonization. And we have a different system. It's called accounting. We have a legal structure, international IFRS. It's called International Financial Reporting Standard. In different countries have different reporting standard in China and different part of the world. So these such as is called regulatory framework. Regulatory framework, the limited company is a compulsory for them. If you want to start a business, you can start, let's say you want to start a business, you can start as a sole trader. What is meant by sole trader?
Sole trader is if one person is liable, it's a one-man company and is liable to all the
you can see all the risk and rewards goes to one person.
yes.
Then we have a partnership, which we look under the Company Partnership Act 1890. And then we have a limited company, which is we registered in the company house, and we have to follow the company legislation. So under these two, it can be unlimited liability, but under company, limited liability means nobody can claim you from personal asset. Yes. So it's entirely up to you. You can start whatever business or the kind of business you want to be as a sole trader. As the partnership, 2 to 20 people can become together and start a business. Yes. Limited company, no limit on it. Is a limited liability as well. We need to register under the Company Act. and we can find the information about companies in the company's house.gov.uk here. IES1 is about the financial statement, how we prepare, how we present, and that's throughout the world. If we follow one standard, that's called IES, International Accounting Standard. Okay, this is all about accounting standard. Why we have a standard? Standard help to harmonize the systems. We have different countries, International Accounting Standard Board, and you may be heard about creative accounting. Have we heard about creative accounting? Some companies very creative. Facebook earned 75 million, but they paid only 4,000 tax. Yes.
Really?
Yes, because they did the tax planning right. Yes, they transfer a lot of expenses. Some company they understate and overstate things. So that's why the rule is carry on changing to make more transparent. So people not lose money. Otherwise, the corporate sector is very I mean telling things different. Very creative. They say the profit not mean the cash. Profit mean it can be credit sales as well as your profit. So a lot of company they say they earn the millions profit, but the next year you may be heard about Enron, World Telecom. You may be heard about. Have we heard about Carillion? Carillion, one of the construction company in UK.
How do you spell that?
Carillions. World Telecom. Have we heard World Telecom?
No, nothing.
Carillions.
I'm not sure.
Okay, no problem. I'll spell it. Maybe I'm not spelling right. So there was biggest company insolvent. Yes, company, construction company.
Have they got problems? They are in.
Yes, they the pension fund that was issue. In something. I'll find for you full details.
Okay.
We'll send you. We'll go through that company later on.
Okay.
So it's a construction company that been. Yes, that was Carillions, I think. So the spell, C with the C. Yeah. Okay. So we'll go through that later on. I'll find the correct, called Carillion. By the way, World Telecom was the one of the company. Yes, is Enron was the one of the company. They are big, corporate scandal. They showed the million profit. The next, few months they can't afford it, pay salary to their worker in collapse. And a lot of people lose millions in the shares because due to the misled. A lot of standard being share. Standard is all about the transparencies more in stocks, in prices. So that's the all purpose. And these are the different, the rules we follow under IES1, under FRSC. So these are, and then other financial statement when we prepare, these should be have a quality. Is a relevant information there? It should be faithful representation there. It should be comparable figures. We should give the 2 years figure, not 1 year, because you can see last year, this year, what's happened. Otherwise, you can't compare it. You can't make the decision. Yes, how many percent increase or decrease happen. Any question there?
Why 2 years? Why not 3 years, for example? Why does it have to be 2 years?
By law, we need to give the 2 years at least. Yes, you can give 5 years to increase the confidence level of the investors.
Okay, just not less than 2 years.
It's not mean those are not available on the public domain. Those are available, but when you provide any new year, you give the previous year as well. Yes. So you can go through good number of years, then you can say what is the trend, what is happening.
Yeah.
Okay. The financial statement always based on the historical cost in the past when we bought the asset, how much? Because some company they do revalue according to the current value of, yes. Like if you have a Windows 98 CDs, when you bought it, maybe that was £200, and you're saying you have a £200 worth of CDs. But what is the real value of £200 CDs now? Is it people still buy Windows 98?
No.
No. So we should give the real selling price or real value, yes, whichever is the lower. So always we record the transaction on the real or the lower value because we have a standard for this. Okay. Next 1.2 is explain the main types of businesses and accounting information and their features. So explain main types of businesses or business and information. So what main types of business? Sole trader,
Partnership,
limited company. It can be private limited, it can be public limited, PLC or PVT. If you want to be registered PLC company, you need investment of £50,000 initially, yes.
Okay.
And then you can register in the stock exchange. You can issue the shares. Otherwise, you can't do public. There are a lot of legislations involved. And other is a charity. Yes.
Yeah, charities.
We can call charities, and we have a Charities Act 2011, and we should register in the Charity Commission. But this is a very good business charity nowadays. Every charity owner have a big car, big house. Yes.
Say that again.
Every charity owner, every chairman of the charity, they have a big house, big cars.
True.
Yes. So, but they're doing charities,
We don't know.
Okay. With respect, it's not everyone same. The five fingers are equal, but that's the most trend, And okay, so some are, of course, they're doing with the good causes, So we can look around the financial data, what information, what features, and what required. So information can be raw facts and raw information. Data is a raw fact, and information becomes some number, some information within it. So like if we'll say your exam on such and such date, it means we are giving data and we are giving information. And then if we look information, first we have a data, then we process it become information. When you have a information, then you have a knowledge. If you don't have a information, it means you don't have a knowledge. Then if you have information, it become knowledge, and then you can take action based on knowledge. That's why people use the term knowledge-based economy. Okay, financial data, when we look, it can be derived from the many sources, processed in many ways, and the many people. Unfortunately, this meaning there are the many chances of errors. Yes. So that's why it's capturing validity of the data. We need to think about how valid the data we have before the COVID-19 and data now. Yes. Before British Airways might be fast growing company. Yes. And now what is about now? Yes. So that's why you need to look around data, information, and it's become knowledge. Internal sources of data, which is a management accounting, we can look around or directly from the suppliers, directly from the supplier, directly from the customer, what information we have recorded from in our internal system. External we can find from the company house, from the library, from the various regulatory bodies. Information, good information always need to be these qualities. It need to be accurate, it need to be up to date, it need to be relevant, the worthwhile if you paying in money to get the information, reliable, easy to understand, and easy to use. Internal and external sources of information. Internal, your accounting system. Yes, is indicator can be internal audit report, financial system. We can design internal checks, audits, and all these reports. Other published accounts, we can look around, like we discussed 4 types of statements, yes? External record, external rules and regulation which we can find, and all that provide the information, yes? Like company house. Any question?
No, not now.
Okay, accounting all about the financial information. Accounting definition: identify, marrying and communicating what information? Financial information. That will help to make the decisions. That's all. It help internal control. It provide checking procedures of transactions. We can track it when we do audit if it's double entry. But in army, people don't use the double entry bookkeeping there, because otherwise we can trace it to whom they supply what things. They only keep where they spend the money, why they spend it. That's it. But they don't give the double entry. Okay, security reason. Okay, types of accountant can be financial accountant, management accountant. Yes, if you are a SEMA member, SEMA, Chartered Management Institute of Accountant, or if you are ACCA, is a financial. ACCA is a financial and management is a SEMA. So 2 different qualifications. Okay, financial transactions, all this provide, and financial accountant, you can look around. If you're a management accountant, you calculate the cost, you make the decision about the costing, you make budgets. And we already discussed about, we can look around financial accounting, management accounting, manage financial, and the cost accounting. Cost accounting, we can look around the unit cost, we can look around the product cost, we can look around fixed cost, we can look around variable cost. These, all the costing technique. We are okay management, the costing methods?
Costing methods, no.
Like fixed cost, do we know the fixed cost? Yes.
So like cost that will not change.
Yes.
So like a rent.
Rent stays the same. Variable cost, the cost will change with the level of output. Like labor, if you spend more hours, more cost. Yes. If you use more material, is a more cost. One is called semi-variable, like if you look pay-as-you-go meter. So if you use more, you pay more. Yes. But you have daily standing charge. Yes.
Yeah, maybe like daily 10p charge.
Yes, 10p charge. That's and some called service charge. So there is in land, their line rental is a fixed, and the call charge is a variable. So semi-variable means fixed and variable together in a product. Okay. So these all information we can look around under the cost accounting. Okay, what about the financial system? We can look around where we can get the information regarding. We learn about, maybe you heard about CRM. What is a CRM?
Customer Relationship Management.
Brilliant. And we have a system, CRM system, that provide the information. Like Sage, like QuickBook, like various other accounting softwares. Financial management system is provide the financial information manager. It help to make the decision related, keep the payment, receive the payment, your credit control, your liabilities, up to date record. All this provide the information. And on the basis of information, we'll make 3 decisions. Cash management, yes. Which month we have a less cash, where we borrow, what a range will be. Investment, if we have a spare cash, where we invest. Capital budgeting is mean we can buy assets, capital asset, and financial planning, receive and payment, are the credit control. So cash management, collect information about receipt and payment. Investment information, where you invest excessive cash, in shares, in various other assets. Capital budgeting is mean you look around where you capital asset or capital. Do we know what is the difference between capital expenditures and revenue?
Revenue is what everything you get, and then
revenue is a day-to-day expense. Like if you clean your house, clean your house will increase the value of the house. No, if you want to, let's say you put the new carpet in a house. You have 3 bedroom in your area, whatever the house value, 3 bedroom. If you have a new carpet and someone don't have a new carpet, it won't increase the value of the house.
No, the new carpet will increase the value. No?
Carpet won't increase the value of the, but if you if you build extra room, yes, and spend money, that will
This is
be
what you
capital
mean.
expenditure, which your council tax will increase, yes.
Yeah,
Other
that's.
revenues, your day-to-day expenses, minor, huh?
Mm.
Okay, the goal of financial management always maximize profit, minimize cost, maximize market shares. Huh? That's all we can look around. Any question?
No, no.
Okay, this is all about management accounting, what benefits. And next we're looking evaluate the role of different users, accounting and financial information. So we have different user, yes. Those use the, so we can look around all this information, yes. Cost accounting, performance management, yes. And we can use planning, and we have a various stakeholders, and they use the information. So we look at the financial statement, these provide the financial information. Internal stakeholders, what those are? Do we know the internal? Management,
Management, staff, employees,
employees, yes, these are the key. External can be anybody else, yes. HMR,
customers.
governments. And
Yeah.
these all they need information and they make decision. So we can look around here. All these depend what kind of the business we are, sole trader, partnership, or limited company, yes.
Mm.
Everyone need information, yes.
Yeah.
And the information, and investor, why they need information, is the company making profit or not, yes. They can assess the performance to invest more or not. Lender, they can look around, they will give them loan or not, yes.
Mm-hmm.
Implies they want to be, they will stay with this company or not.
Mm-hmm.
Customer, they will buy it and they give it the guarantee, maybe the company dissolve in next day. Huh?
Yeah.
Government agency, they say the tax been paid. The public will see how much job they offer and all. Manager, they make the performance and the bonuses all. So that's, the who is interested parties, what they do and what, and the way, they make the decisions. Any questions?
I'm okay.
Okay, so today lesson we discuss about the difference between management accounting and financial accounting. We discuss some ISAs, yes, those are crucial. Financial accounting always is the legislation we have to follow, such as the Company Act. If we are a company, yes,
Mm-hmm.
and other, and we discuss, how or where we can get the information and how decision can be made by the various stakeholders. That's all was today lesson. If you have no question, and we'll hope so we'll do in the next week, second lesson, and we'll go through LO2. In the meanwhile, if anybody, those are listening, please, if you have any question, drop me email on my email address. And I hope so speak you all during our next lesson when we'll go through more and we'll look, actual company statements, and we'll make, and we'll use some tool to make some decision based on the financial information. Thanks for attending, and
Thank you,
speak to you
Andrew.
all.
Thank you.